You're watching Resource Intelligence, Newsmakers, where we speak with executives from publicly traded companies that are making the news today. With me right now is Peter Cashin, the President and CEO of Quest Rare Minerals. Quest has had an incredible year of good news. The company has wowed investors consistently with increases in its share price as well. Recently, the company raised $50 million on the public market, which is enough to build a small mine. Of course, with 100 million tons of ore, this is no small deposit. Thanks for being here.
Thanks, Doug. Appreciate it.
Congratulations, Peter. You were awarded, and Quest was awarded the Prospector of the Year award. How did that come to be?
Well, we were awarded on Wednesday the Prospector of the Year award on the basis of Strange Lake discovery, and not the fact that it was large and significant discovery, but it was all the associated activity that followed the announcement of the discovery. There was a bit of a staking rush.
Right.
This past summer, there was quite a number of companies that were doing some exploration on that ground. So it really generated quite a bit of activity in the area, and that's one of the provisos for the award. And so we're very proud. I mean, that was I'm very proud for Quest and the Quest team for what they did, and we've done that in a very, very, very short order. I mean, we're a fairly new company. We launched in January of 2008, and now we're developing probably one of the world's most significant rare earth deposits. How
much of the global demand for rare earths could Strange Lake satisfy?
Strange Lake would feed out about 6% of the world consumption, so not enough to flood the market and depress the prices, but certainly enough to feed into a very important aspect of the rare earth element sector that the Chinese don't deliver out to.
What does your PEA suggest as an annual output in rare earths?
Well, first of all, the PEA is looking at about 4,000 tons of open pitable material a day, and we would deliver out, from our assumptions, about 12,500 tons of rare element oxides per year.
So it's interesting because we look at a global picture and you say, oh, well, it'll be about 200,000 by about 2015. Correct. And that's great. American demand, according to USGS, is in the ballpark of 10,000 tons per year, metric tons, I think. Your mine, when built, could satisfy the entire U.S. need for rare earths.
That's correct. But the thing is, that's for the full spectrum, 10,000 tons. Because of the high proportion of heavies at Strange Lake, it obviously feeds into a specific sector within that 10,000 tons. And a lot of the new technologies that are being developed now, are, especially the military applications and some of the new high-tech electronics, are showing a preference for the use of heavies. But up to this point, there has not been a primary source of the heavy rare earths. Strange Lake will be able to deliver on that to the markets.
For somebody who doesn't understand the importance of rare earths, and possibly more importantly, heavy rare earths, explain what's going on.
Obviously, rare earths are feeding into what I would consider to be the technological economy. In other words, those sectors of the economy that are fairly recent developments. I would say over the past 20 or 25 years, these things have come to being. Wind turbines and hybrid automotive technology, cell phones, flat screens, the whole bit. Rare earths are small contribution in terms of physical dollars at the cost of those technologies, but they're critically important and they can't be replaced. There's no substitutes for their use. Without them, those applications just won't work. So they're that important. And I think the big issue related to the nature of these metals is the fact that they're very heat tolerant. What's neat about the heavies, and the heavies, of course, are they're atomically heavier, but they're much rarer. What they impart is even further heat tolerance to those same applications. And as a matter of fact, as we speak, they alloy a lot of the known neodymium iron boron magnets that are in wind turbines and the rest with a little bit of heavy called dysprosium. And it's allowing to bring your heat tolerance up that much higher.
When did your PEA come out, and why did you focus on the B zone specifically?
Well, we delivered out the PEA in September. What we liked about the B zone, it was fully in Quebec. So, up to this point, the only known deposit was the old historical IOC what we call the main zone, and straddled by a provincial boundary that has not been surveyed yet. So there's issues related to the true position of the boundary, not really knowing what percentage of the deposit would be available to us. The B zone, on the other hand, is well away from the border. It's fully in Quebec, positive jurisdiction. It's large, like you pointed out earlier. It's open pittable. We've done our metallurgy on that. It's conventional acid leach, very good recovery. So it's just it smacks of being a much better deposit. Is
it quite straightforward then? I mean, how many mineral phases are there? Are you fully in, bastnasite or whatever?
No, actually, it's the elemental suite is what's called gadolinite, gittensite, and kenosite. Those are calcium-bearing, heavy rare earth elements, silicates, and carbonates. They've been recrystallized, so they're very amenable to acid leach. It's almost like Mother Nature did the pre-cracking that a lot of these deposits require to liberate the rares.
That led you to a very low, I think, operating cost.
That's correct.
About $100 per ton, you're estimating.
102 to 105. That's correct. That leads into the fact that it's open pittable, so it's it's $5 a ton versus your underground, which is in the order of 50, 60.
Right. On the other hand, that's cost value. You're looking great as well. Last year, when I spoke to Peter Cashin, when I spoke to John Kaiser, Peter, he had done an evaluation on each of the elements and came up with a value of $304 per ton.
That's right.
What is that now?
Oh, it's gone up leaps and bounds with the Chinese cutbacks on their export quotas. I can't even estimate what it is. I think it's in the order of about $500 a ton. I mean, it's gone through the roof.
What did that come out with? What's your NPV and what are your revenues expected?
Oh God, the IRR, internal rate of return, is very robust, 36%. Okay. The NPVs, and we assumed a 12% discount rate because I mean it's still high risk opportunity. It still came out to be about $1.4 billion over a 25-year production period.
That's a big
deposit. It's a hell of a deposit. Yeah.
So you say that you have a mine life of 25 years, but actually you've got enough tonnage for 62 years. Why the discrepancy?
Because the thing is that once you go past the 25-year window, and the rest is all gravy. And to be honest with you, we just wanted to show that establish the economic model in a reasonable time frame. But and that was based on last year's resource estimate. We've done subsequent work now, and we know that we're going to be well past that timeline. It's quite a large deposit, as you pointed out earlier.
What prices did you use then? You say a payback of 3 to 4 years, correct, which is incredible. Yeah. Are those recent prices, or those trailing 3-year?
Those are, we grew a trailing 3-year average from 2007 to 2010. So it's actually a fairly discounted price. Mm-hmm. It's about a third, I would say, the basket price assumption we use for Strange Lake is about a third of what the current spot market price is. So it's pretty conservative. And in comparison, for example, to the recent Molycorp IPO, JP Morgan, who undertook the financing, used an assumption of spot less 35%. And that's still double what our assumed basket price is. And just because I think we had to be conservative the first time through. You want to put it through the gauntlet, and if it survives the gauntlet, you're dealing with a fairly robust deposit under any economic circumstances.
Let's talk about that geographical aspect of it then, above the 49th
parallel.
Parallel, yeah. Location-wise, you don't have any First Nations issues or anything, and Quebec is a fantastic place to build a mine. What about infrastructure, though? Have you had issues there? And how are you dealing with those?
Well, I've had to answer quite a number of shareholders or institutions. Well, what about the concern about the lack of infrastructure? I like to counter that if Strange Lake were a small deposit, I'd be very concerned. If infrastructure difficulties would have been an issue for such mines as the Voisey's Bay copper-nickel deposit, or the Raglan nickel deposit, or the Echo Bay gold deposit in the territories, or Red Dog, lead zinc in Alaska, they would never have happened. But in actual fact, what made those projects is the fact that they were very large and very rich. And because they were large and rich, they gave the comfort to the companies getting involved with them that richness would give them such a significant margin that it would mitigate their potential risk of opening up an operation in those things. So I don't think from an infrastructure standpoint it's unattainable.
When do you foresee you going into production by?
Well, I've got a model of a startup of about 2015, 2016. I think that's, again, much in keeping with my philosophy of under-promising and over-performing in terms of what we could deliver out. But what's nice about an open pit opportunity is it's more easily scalable. If you want to fast track it, then it's looking very, very good, and the economics, are continue to be very positive, and you've got indications from end users of wanting the material you can deliver out. Then you could probably accelerate that to in the order of 2014. So,
do you see that as very important in terms of other your peers or competitors that you have to compete with to beat them to market, other ones who may be close?
Don't forget, there's we're really talking to a different sector of the rare earth element space.
Because of the heavies.
Because of the heavies. Strange Lake stands alone on its own in terms of the fact, the extreme enrichment, the size of the deposit, the amenability to conventional metallurgy. So, based on all of these green lights that you seem to be getting, is this a fait accompli? No, I'd say there's could be bumps in the road all the way through the development. But I think the project and the deposit is such that it's a lot of our concerns and risks have been mitigated by the nature of the deposit itself. So.
I think the market speaks a great deal as well. And when you look at how you're trading, how quickly your price has escalated and managed to hold the course so far, it says a lot. It says a lot about that. Yeah,
no, I think that the deposit speaks, and I think the last time you and I spoke, I did say that the true success of a junior exploration company is to first and foremost ensure the technical integrity of the program and bring those along and develop your resources first before you go out and promote them. And we've done that, and the proof's in the pudding.
Yeah, you've had a lot happen in the last year since we last spoke. What will happen between now and next year when we next speak?
Well, we're going to get our revised resource estimate that gives us the measured and indicated grade that we'll need for a pre-feasibility study. We were pretty confident because of the positive nature of the PEA, that we will make that decision to go into pre-feas. We'll be working on that throughout the year, continuing our exploration and definition program. There are indications of further resources on the property that we've yet to drill define. And my hope is that we can deliver out a pre-feasibility before the end of the calendar year.
It's amazing. It's an amazing year you've had with a huge fundraising. Relatively unprecedented in the rare earth sector. It's moving fast and gaining great ground. Prospector of the year, your PEA, and so what we've got coming into next year is your pre-feasibility study within about a year's time. We'll keep watching for you for that. Thanks for coming.
Very good. Thanks for having me. Thanks, Dick.